If you're new to the channel, then welcome, and if you're returning to the channel, then welcome back. I just want to extend a quick thank you to all of you for tuning in. So I love watching YouTube. It's probably my favorite thing to do. In fact, I think my cell phone is basically just a $400 or $350 YouTube watching device. And this especially applies to videos that are related to topics like finance or economics or even the real estate market. And if you're watching this video, then you probably like to watch the same things as well, which means that you probably are aware of all of the uploads we've seen lately talking about people leaving California and moving to states like Texas, Arizona, or Nevada. People are also making videos that have titles like impending stock market crash or impending housing market crash, when really the economy, at least from a stock market perspective, still seems to be going up, and housing prices haven't had any effect other than going up as well. And so I've been taking notice of a lot of these types of videos that we've been seeing lately, and I've been thinking about how, if at all, are any of these topics related, and why are people making so many videos about these things? Really, how does it all fit together? And that brings us to today's video. Now, of course, I'm going to, preface all of this with I'm not an economics major. I'm not a professional investor of any way, whether it's real estate or the stock market. This is really just, a topic that I like to study and research and learn about. So, of course, take my little observations and analysis with a grain of salt. These are just the conclusions and observations that I've been able to come to for myself. Now, I think a good starting point on figuring out how we've gotten to where we are today is going back maybe 10 to 12 years. And yeah, I'm talking, 2008, 2010, somewhere around there, which is essentially the heart of the 2008 financial crisis. And it was during that time that we saw a big financial and stock market crash, which was particularly damaging to the housing market. And this was really unfortunate, obviously, because tons of people lost jobs, they lost their homes, and even people who were on the verge of retirement, their 401ks and Roth IRAs and all of the retirement investment accounts that they had were completely decimated by the collapsing stock prices. Now, there are a handful of reasons why all of this happened, but if you really want a good answer, I suggest that you go watch the movie The Big Short, or you can check out an episode of South Park called Margaritaville. I think that they both do a pretty good job of explaining what happened. Anyway, one kind of positive outcome from all of that situation was that it set us up for what would be the longest bull market run in the history of the country. And a bull market is basically just when stock prices are going up and the overall stock market itself, the trend is upwards. The arrow is going in the positive direction, which from that we can make a very, very simplistic analysis to say that the health of the economy is good. And it wasn't just the stock market that was recovering, it was also the real estate and housing market that was recovering right next to it. And now keep in mind, this was over the course of a 10-year time period. It wasn't just one day the market collapsed and then the next morning people with, big savings accounts or investors with a ton of backing were buying up houses like hotcakes. But like hotcakes, houses and other forms of real estate and even stock prices were dirt cheap, so people were presented with some really good investment opportunities. I mean, just think about all of the top real estate and financial YouTube channels that you and I like to watch. If you talk about their success or hear them talk about their success, they all mention that they got started about 5 to 10 years ago, whether it was investing in stocks or investing in real estate by flipping houses or getting rental properties. They got in when everything was cheap and there was a lot of opportunity to make money over the next 5 to 10 year time frame. And this isn't me being dismissive of what they accomplished. I mean, a lot of work goes into that and they still had to do a ton to be able to accomplish the things that they've done. On top of that, you can't blame them for being in the right place at the right time. I mean, they didn't know that these things were going to turn the way they did. So that's just all to say that, I'm not attacking their good fortune. In fact, many of the good YouTubers who actually want to give you actionable advice will talk about the fact that they were in a lot of ways lucky and timing had a lot to do with everything. Now, fast forward to 2019 and we really have just another solid year of growth, and all of the indicators were saying that it was going to continue. The housing prices had gone up 52% in the US, which meant that people had money to buy houses and they were buying them even though they were more expensive. The Dow Jones, which is another big stock market indicator, was up by like 150% over the last 10 years, which meant that the health of the economy, at least from this one indicator, was saying that everything was good. So great, everything's going great and the economy and the housing market are doing well. But if you were paying attention during those time periods, you'll know that there was something bubbling underneath the surface of all of this. And this was especially the case in places like California or New York or Washington State, where the cost of living was increasing, housing prices were skyrocketing, the tech scene was booming in these places, gentrification of neighborhoods, and a ton of other factors were contributing to these places turning into really high cost of living areas. And when things like that happen, it makes it really difficult for the low income class and the middle income class to continue living in that kind of environment. I mean, Los Angeles in this past year alone has seen a 14% increase in homelessness, and median rental prices for the top 8 cities don't fall below $1,800 a month for a 1-bedroom apartment. And half of the places on that list were places in California where the median income for the state is around $63,000 a year. And that's just gross income. We're not even talking about taking out taxes or healthcare costs yet. But we were told that everything was fine. The economy is doing good, unemployment is low, stock prices are going up, people were spending money, people were buying houses, at least people that had money to do so. So we didn't have anything to worry about. Then in the first quarter of 2020, we saw a pandemic hit which decimated the US economy once again, bringing one of the biggest economic downturns that we've seen in recent history, which lasted for like a week or two or something like that, because we ended up, injecting a stimulus bill and handing out stimulus checks that saved the economy. I mean, looking at the stock market, we can see that it's basically at, pre-pandemic levels, and the housing market was relatively unaffected by all of this, where either prices stayed the same, or in some places the housing prices have gone up even faster than they were during pre-pandemic times. But still, even with all of that going on, I know that a lot of people are like me and feel like there's just something off about this situation. Overall, it seems like the stock market is more volatile than ever. And when everyone was expecting it to downturn, instead it totally rebounded, which when you look into, one of the major contributing factors is the Fed buying up corporate bonds, which was totally unheard of before 2020. And I'm not someone who usually likes to make predictions about these kinds of things. I think that the pandemic itself has taught us that you never know what's going to happen, but the artificial propping up, it just feels like maybe it's not the best idea if we don't know what the long-term implications of that will be. And obviously the pandemic hasn't done anything to help the situation of homelessness that people are facing in certain cities across the US. While the stock market is showing signs of life, what we're missing is all of the small businesses that are being impacted, and places like the service industry or the movie theaters and the airlines, which are having a significant negative impact. And unless this prop-up from the Fed continues, who knows how long it is before some of these other industries see the same type of negative impact. Housing prices have continued to increase, and this is even more so the case since the interest rates on loans have decreased. Combine this with the fact that people who are living in high-cost living areas like Los Angeles, New York City, or Seattle have all started to take their remote jobs and move to cheaper cost of living areas like Nevada, Arizona, or Texas. And this has a very localized effect for the real estate market in these states that are becoming more desirable to live in. And so for native residents of these states, or even incoming residents of these states later on down the line, getting into these housing markets is only going to be more difficult. And home sellers are aware of this. They want to make money, so they're increasing their home prices because they know they can get away with it with all of this new money coming into these states. So while we might see things like rent and housing prices decrease in major cities, I suspect that some of the more desirable states to live in will see the localized effect of housing prices and real estate prices just continuing to increase. And in my opinion, the combination of all of these factors has made the whole economic situation a bit worrisome to deal with. The cost of living in a lot of places is becoming challenging, and this is especially the case when people are out of jobs or don't know if they're going to be able to return to a job. And the artificial nature of the stock market and the ever-increasing housing prices, this whole situation is getting a bit worrisome to me. It's becoming more difficult to participate in because a lot of it feels so shaky and unsure about where it's going to move in the future. And that's kind of how I feel all of this is related. A lot of this has been bubbling underneath the surface for the past maybe 2 to 4 years, and really all the pandemic has done is accelerate the issue and expose even faster where some of the flaws were laying in our system. And just like we say every year, it seems to be that the gap between the lower to middle class and the upper class just seems to be widening. So yeah, I think that's been a pretty decent summary of what a lot of YouTubers have been talking about over the past, I would say 2 weeks or maybe even a month at this point. I'm not going to sit here and pretend like I have any answers or solutions that I can offer to, correct any of this. I mean, this is all really complicated stuff, and this is just coming from an economic perspective. I mean, what kind of effects are the continued civil unrest in the country going to have? And we haven't even talked about the potential effects that the outcome of the election will have on the economy. But anyway, there's really no, call to action or anything in this video or any advice that I can give you. It's really just observations that I've made and things that I've been thinking about lately when it comes to economics and finance. So everyone stay safe, save your money, do your best to keep surviving, and I'll see you all next time.